guys, Brian Stevens here with Mortgage Shots. I have Jim Neighbors, who is the president, not the chair, but the president of the National Association of Mortgage Brokers. We're having about our monthly meeting, and there's a bunch of stuff to talk about. A couple of things specifically taking place with NAMB, but right off the bat, let's just talk about this. Interest rates. How do we feel about that?
We'd like to see them go down. They are gradually making it, they're moving in the right direction. They're just not moving fast enough for us.
Well, here's the real question I have is, the Trump administration came out and said, we're going to get lower rates. And I said, well, how the heck are you guys going to do it? You can make an argument right now that they have a path if it's going to work or not. But I guess my larger question is as it pertains to the mortgage space, how do you think the new administration is doing?
Well, I think so far it hasn't had much of it's had a very a mild effect on the mortgage industry. Okay. Interest rates have traditionally over the last 40 years been between 6 and 8%.
Right.
And we're still in that 6 and 8%. Now, during the Trump administration, it got down into in the beginning of the Biden administration was in the 4s. That was because of COVID. It had nothing to do with their policies. It had everything to do with the pandemic. So anyone that's thinking, oh, well, we're gonna get down to 4. No, we're not.
Yeah.
We're gonna be in that. Hey, I think it would be great to get 5.5 or 5. But
yeah.
That, the idea that, and particularly a lot of consumers were thinking that was going to, for some reason, happen day one. Interest rates were going to drop 1%. And of course, those of us in the industry knew that it would take a longer period of time than that, since our 30-year mortgage rates are tied to the Treasury. And it's going to take a while for that to come down. So we're seeing, gradual, but it's still, I'd like to see it get below 6. And, now that Bill Pulte has just been confirmed, he's very pro-consumer, very pro-housing, affordable housing. So I think we're hoping to see some good things there.
Speaking of housing, affordability is a huge issue, and a lot of it is just simple supply and demand. Right now, we get most of our building materials, our sheetrock, our framing wood, our shingles, most everything we get north of the border, and we get our labor force south of the border by and large. Are you concerned that the tariffs and some of the actions taken by this administration is going to hurt affordability when it comes to housing?
I think that, and that's kind of like a personal issue, on what your thinking is. On the dot, yeah, I'm not a big tariff person. I'm not for increasing the cost of anything to anybody. But, I looked at the fact that, my father was a newspaper pressman. He did one of 4, I don't know, you're old enough to remember Zehrs and TV guides and things like that.
Oh, yes.
His plant printed it for the entire country. And it was owned by Newhouse. Well, what did Newhouse do? He saved money by moving it to Canada. And my dad was out of work. And that's going back to the 1980s. So when you look at, lumber, they have an access to lumber. Canada's pretty big. So they're shipping it across the state lines. But the president has talked about opening up more forest land and, of the national forest and thinning it out to make up for that lumber shortage. Now, will that actually drive down the costs? I don't know. It will, with the tariffs included, but, is labor cheaper in Canada than it is in the United States? And then the other part you talked about is the people that are building the homes. The most expensive part of building a new home isn't the guy putting up the sheetrock. It's the plumbing, it's the electrical, it's the actual worker, unionized workers.
Yeah.
That, knowledgeable workers. And that's not changing. So it's just, okay, who's going to step in and want to put shingles on a roof? And honestly, until you said it, I didn't realize most of our shingles came from Canada. I knew our lumber did.
Yeah.
And but I didn't know asphalt came from up there.
So let's talk about your ledge agenda right now. Writing loans again on a regular basis. I understand the concern with trigger leads. I can't for the life of me believe anybody thinks these things should be legal. The cost of credit reports. There's a lot of issues that are facing the mortgage space right now. What's the tip of the spear when it comes to NAMB and what you guys are looking at?
Trigger leads, of course, is our number one on our issue. Our number one issue. Number 2 is Gold Star families, flood insurance, the cost of not only flood insurance, but all insurance,
Yeah.
which, looking at, I've been doing this 49 years. When you used to think about a mortgage, the biggest expense was the actual principal and interest, monthly interest. Yeah, and then when you were estimated what your insurance was going to cost, you'd figure about 200. Let's add 200 to the monthly payment, to cover that. But now I'm talking to people in Louisiana whose insurance was 300, went to 3,000, and now they're looking to 6,000 to 9,000.
Yeah.
And I think even Jamie Dimon mentioned this. When he talked about, will housing still be affordable? It's not the interest rates that are going to make the housing unaffordable. It's the insurance premium that's going to make it unaffordable. I just happened to, last week, I got my own personal renewal. Never had a claim. I'm sitting in Cleveland, Ohio. Guess what? We bitch about the weather. It's too damn cold. I used my snow blowers 5 times this year, whopping 6 inches, so not really a problem. But my insurance went up from $1,200 to $1,800 because the insurance company has to make a profit too. So I have nothing to complain about as compared to when I'm talking to somebody in Louisiana that's looking at it going from $3,000 to $9,000 over the next 2 years. And I think what Jamie Dimon was talking about is the cost of insurance is now going to be a bigger player in when you're calculating the debt ratio.
Well, we're in a fishbowl, my friend, and if you were to ask me the reason why they're paying $3,000 down in Louisiana and yours went up for your 6 inches of snow is because of the fantastic policies we have in the state of California over here, and somebody's got to pay for our mistakes, and I'm afraid it might be you guys. I'm sorry, but I think that's actually taking place.
We learn from our mistakes.
Oh, we don't. We just offload the cost on other states. Hey, listen, membership with NAMB. You guys are doing good these days.
Yeah, membership's up 5.5% or 7.5% so far this year. And they wanted to make sure that I emphasize, a lot of people are looking at different rates, or what are people doing? I mean, we're at 53,400 members at the end of December, so our membership is continuing to grow. But that's because not only I think more people are realizing, hey, when I joined NAMB in October of '93, it was for protection, worried about being regulated out of business or legislated out of business. But, now a lot of it's about education and about training. Social media training in particular is becoming a huge, huge player. I actually sat through some classes on how to do it, not only a Zoom call, but how to do if I wanted to do a TikTok or some of that. And a lot of our people are taking advantage of it. So our goal has been to push out. Yes, we've always had that VA certification program. I sat through it last week again. And because there were some rumors that they were thinking as part of closing the VA down, they would just make VA just another mortgage product. But if you sit through the class and you realize there are so many things that are different on a VA loan than on a conforming loan, that it would be impossible just to say, oh, it's a zero down, no payment. Like the fact that there's no cap on how big of a VA loan could be. You can get a $5 million VA loan if you can have the disposable income or the residual income. So I think, we're offering that education. Credit has always been a big issue. And we've expanded that. We've just, we're working with Rocket on a credit class, a certification class that, our members can take out. At the same time, we're working, not only do we, our cost of continuing ed for your 8 hours that you have to take, or in California, I think you have to take 9. We're looking at developing classes that you can take back and get approved in your state to teach realtors,
That's
so
great.
that realtors.
That's great.
Yeah, I wrote some of those classes, affordable housing, when the loan laws changed with the CFPB, the difference, a 1 hour class or a 2 hour class on this was a good faith estimate. And this is, a loan disclosure. So and one's 1 page, one's 5. And let's go over, things, because realtors need to have an idea of what's going on with the mortgage business. Besides, the guy says he has a 800 credit score and makes $80,000. So instead of you as a mortgage broker just sponsoring a class that's being taught by a title company, we want you to be in front of the realtors, so that they have to look at your face for 2 hours instead of you just get the 5 minutes at the beginning and the 5 minutes at the end.
That would be great. I've actually been certified to teach realtors in a number of states, including Cleveland. Recently, I was out there.
I wish I knew you were up here. I would have come.
Yeah, it was great. I told you I love Cleveland. I think it's fantastic. But anyways, it really had an impact on the number of agents who came. But more importantly, we've heard the term realtor hours, which means we show up late and we leave early to everything. And but it really made a big impact on realtors sticking around to hear everything that was going on. And that was huge. So I think that would be great.
So and varying them in length. I wrote a lot of 1 hour classes. So you could do 1 hour, have lunch, do the second hour. But Ohio, every state is different. We require 16 hours every other year. 3 hours of them have to be ethics. Well, I don't want to write the ethics course because that's the last one every realtor takes as their license being renewed, because that's the most boring of the classes.
They might catch on fire.
Well,
in the ethics class.
Basically, it's not going to do anything to help them sell more houses. So
Jim, on the books, you're saying being more ethical will not help you with your business.
No, I said realtors don't like to take the ethics class because it'd be more interesting to find out what Fannie Mae's new program is.
Yeah, that's true.
Home Possible or Freddie Mac's Home Possible program.
Programs, you bet. So, final question for you. I didn't even realize this till about 10 minutes ago. Everyone's Irish on Monday. Do you got any plans?
I'm, to be honest with you, I'm in the middle of, or the end of having cataract surgery done, and I go in for my final checkup on my left eye on Monday. And I'm not allowed to drink any alcohol, so it's been 8 weeks since I had a beer. So I think after my final checkup, mine's at 11 in the morning, the parade starts downtown at 1.
Yeah, well, hey, listen, have a good time. I'm with you. My liver's already green, so we're gonna lay low this St. Patrick's Day. But I will be cooking my corned beef cabbage.
We actually picked that up from the store this morning.
All righty, man. Hey, you stay safe, and we will be talking soon. And keep up the great work over at the National Association of Mortgage Brokers.
Thank you. Look forward to talking to you in the future.
Will do. Bye now.
Bye bye.